Hello, everyone. Once again, welcome back to my channel. It's been a couple of days I recorded and then I gave you updates on what's transpiring so far on the market. So today I want to quickly, I was trying to try streamline my videos. So today I'm going to record a video on the power of three. Okay, so it's basically going to be about the power of three and how you can identify them on the market and then how you can trade off of them. Okay. Okay, so beautifully, the power of three is a candle formation that happens on the chart almost all the time. Okay, so if you had watched my video on swing highs and swing lows, so anytime we want to say we have a swing is when we have a three candle formation where um, the candle to the left of it. So a typical example is this group of candles here, this three group of candles. So this, and that. We notice that the candle to the left has its high lower than the candle in the middle, and then the candle to the right has also its high lower than that of the candle in the middle. So when you want to say that you want to find the power of three or a swing, you have always the candle in the middle having its high higher than that of the candle to the left and then to the right. That is what we call the power of three. Now, on the this is for a swing high scenario. So the swing low scenario is this particular formation in here. Okay, so you can identify this as well. So we have this candle, this, and then this, and then this one. So with a swing low scenario, we have this candle, this, and this. Okay, now you have the candle to the left of this swing low. The low of it is not lower than the one in the middle, and then to the right of it is as well not lower than that of the one in the middle. So this gives you a swing low. Okay, and then this is what we call the ICT power of three. Now, there has been a lot of questions and a lot of misconception about the power of three and how it really works. So, for instance, people say that they follow the ICT power of three concept and still don't get it right. Well, today I'm going to also try my best to streamline things based on ICT concepts and make you have a good picture of how the power of three works well on the market. Okay. All right. Now, one of the key things to take note is that the power of three, you may see it happening almost, or let's say with swings, you may see it happening almost scattered on the charts almost every now and then. For instance, you can have this swing high in here. So we have a candle to the left of it lower, the one in the middle higher, and then to the right of it. Both doesn't have to the left and to the right doesn't they don't have their high higher than that of the one in the middle. This gives us a swing, yes. But now the question is, where is the swing happening? Okay, where is the swing happening? So the power of three concept actually um, works well when you know the premise and the context within which it is happening. Now, where do we usually have to identify the power of three? Let's go to our chart. So we are going to our chart and then we are going to identify them beautifully here, and you see how it works like magic on this chart. So this is volatility synthetic indexes, and you can try them on any other asset pairs and you can see how they really work. All right, so beautifully, let's look at this. Let's start from here. Now we had this swing high in here. Okay, price rallied down, came to form a swing low in here. Now, what do you think necessarily this swing low has done? We don't want to consider the past or the previous data after this date. Okay, we don't want to consider the previous data. So this is what we saw. All right, price traded deep into this side. So when you do your analysis backward, what do you see? Clearly, you've seen that there was a low which has been traded through. Okay, there has been a low in here which has been taken, as easy as that. So this low in here, there was sell side liquidity resting in there. It has been taken, as simple as that. So the sell side liquidity resting below this low and then this low as well. So they are relative equal lows. This sell side liquidity has been beautifully swept. All right. So the it was swept to the downside. So the sell side liquidity resting below these equal lows has been taken. Now, in as much as price has taken the sell side liquidity resting below this low, and the formation happens automatically. Okay, so what we usually want to see the formation does is this. Now we have the swing low happening right after a sell side liquidity has been taken. We want to see that the swing low will be formed, and after the swing low is formed, the next day after the swing low has been formed, so this three candle formation, this is day 1, day 2, and day 3. Right after this swing low has been formed, let me come to the side. Right after this swing low has been formed, after it has taken down the sell side liquidity and it has this type of formation, we really want to see, or we actually want to see, the next day's candle rallying and closing. So this is one of the ways to identify buyers for the day. Okay, so obviously this day was going to be bullish because after it has taken sell side liquidity, we expect price to rally up. Okay, so it forms a swing low. So day 1, day 2, day 3. So day 4 and day 5, it usually happens on day 4. So on the day 4, we want to see price rally up. We want to see price rally up, close above the high of this day's candle. So your trade premises are framed around this side. So when you go down to your smaller time frame, it may give you the telltale signs, and then you can ride the market to the upside. Obviously, after this swing low has been formed, where do you think will be the next obvious target? We are looking for this fair value gap resting in here and price targeted, as you can clearly see here happening. Price really traded deep into the fair value gap resting in here. As easy as that. Now I was saying that let's ignore this because we don't want to assume we know what happened here. I don't want us to go back. Now let's come here. Right after price traded here and traded into this closed in into this fair value gap as well as tapped into this fair value gap, we expected that yes, it has invalidated whatever is here. So it's done. Action here is done. Now we want to seek for sell side liquidity. Or we want to see price doing something. And what is it doing? So we saw the power of 3 formed in here. Day 1, day 2, day 3. So the high in here is higher than this and higher than this. So obviously, what are we looking for in the on the day 4? We want to see a rally down. So this is a swing high. So we want to see a rally down on day 4, and beautifully, day 4 will always close down on the low of that day 3 candle. If it doesn't close, it will still on the day 5, it will end up closing. More especially when it has happened at a point where liquidity has been taken. Now, watch this. This side, we noticed that this fair value gap in here was taken or had been tapped into, and then we saw the rally away with the power of 3 being formed in here. So it is very automatic that we're going to see a rally down. Now, beautifully, what will be the target? We saw another fair value gap in here. So price is going to tap into this fair value gap, and whatever it does next follows. So now we see price tap into this fair value gap. Okay, taps into this fair value gap. So we have this candle formation. We have day 1, day 2, day 3. So we have accomplished something in here. In as much as we have accomplished something in here by tapping into the fair value gap in here. So we have day 1, day 2, day 3. And what do we see? So this is a swing low. Okay, power of 3, 1, 2, 3. So swing low. Then we expect day 4 to closed in on this high in here, and you see beautifully that's how the market was framed in here. It went up to close in on the high in here, as well as closing on the high in here, as beautiful as that. Then we have price coming down. What do we see again? We see price closing below this swing low. So now sell side liquidity resting this below this low has been taken again. Now what do we expect? We have a swing low day 1, day 2, day 3. What do we expect for day 4? Rally up above this. So now don't say that the power of 3 doesn't work. It works, but you should know the context within which the power of 3 is working. What has price done recently? Okay, price has it has swept a swing low, or it has swept sell side liquidity. So now we have to look for the next available liquidity. Okay, so the next available liquidity probably will be after it has swept this low. We are looking at this fair value gap resting in here, and then price rallies back into the fair value gap. As beautiful as that. So price has closed in on this fair value gap. We have formed day 1, day 2, day 3, another swing high in here. Watch this. This swing high had also swept this buy side liquidity in here. Okay, so it has accomplished something. At least it has swept this buy side liquidity resting inside this area by some small pip. Then what happens? We have this candle formation from 1, 2, 3, power of 3. What do? The next day we want to see price rally down close below this, and then it happens beautiful in here. All right, so beautiful. That's how the power of 3 works. Now watch this. So 1, 2, 3. Can you see that has price? What did price do here? Did it close in fair value gap? No. Did it close in on low? No. So we had this formation. So don't expect price to rally and close above this, which is an invalid um, power of 3 formation in here. The same applies to what was happening in here. Price has not taken any down. Has not taken down any form of liquidity, either the recent swing high or fair value gap or into a break or anything. So we just take it off. Okay, now we have this happening in here. Price trades down. Price trades down. Day 1, day 2. What did it do? This one, price had closed in on this relative equal lows in here. But watch this. Day 1, day 2. Look at day 3. Day 3 had closed in almost around this area with this kind of candle formation, and then we would have naturally expect price to rally up to, but also oftentimes look at the general context, look at the overall context of the market. Where is the nearest liquidity? So this one, when we look at this on the 4-hour time frame, you realize that there was more liquidity resting below this area. So this price had actually, this area, when price traded above this side, it took down all the sell side liquidity resting above these areas and this high, and then we wouldn't expect it to, whatever price wanted to do, it has already accomplished it in here already. So we're expecting it to rather look for lower time frame liquidities and then grab, which was some fair value gaps inside this area on the 4-hour time frame. Okay, so price rallies to grab them, and then, but more beautifully, you should look for the power of 3 on clean highs and clean lows. Okay, clean highs and clean lows, and when they form, you would see them beautifully happening. So for instance, a typical example, we have day 1, day 2, day 3. What do we see in here? Day 1, day 2, day 3. Sorry, look at the high. Well, so this is the high. So this is day 1, day 2, day 3. Right, day 1, day 2, day 3. So where is day 4? Day 4. Beautifully, you can see how price rallied down after it has taken this swing high in here and then traded into this remaining fair value gap, and then we see how price broke down beautifully in here. All right, you can't always get it right, but then this is an easy bread and butter way to get it correct. Okay, price swings from this high to this low, and then you could see that, okay, so it had taken down the sell side liquidity resting below all this low, and it does it beautifully in here. Day 1, day 2, day 3. What's day 4? Powerful happening in here with this bullish. So your bias, you can easily be determined when you are more precise with some of your entries. Okay, so that's how the market is doing it. Now this one is coupled with maybe my next video that I'm going to do, which is going to be of great benefit to you, which is internal liquidity and external liquidities. Okay, so that's going to be my next video. If you watch that one, it will add on to the information I'm giving you out here for you to rather even have it more clearly. Okay, so I'll catch you on that video. And the same thing happens, the power of day happens in here on this low, and then we have day 1, day 2, day 3. The 3 candle formation has been formed. Day 4, we see the rally up, sweeping the buy side resting in here, and then the remaining fair value gap resting in here. As beautiful as that, it happens in here as well. Day 1, day 2, day 3. Where's day 4? We see the breakdown in here. So beautifully, basically that is how to go about the power of 3. Okay, catch the swings well at the appropriate point, and on the 4th day you align your market and look at the target. So for instance, on this day, what was the possible target? Was this fair value gap? Okay, this fair value gap after it had taken down this high here, the possible target was this fair value gap, and then you could see that day 4 rallied into the fair value gap beautifully. All right, so basically that's all that I have for you tonight. I hope you enjoy your trading all this while. So I'll catch up with you in the next video. Until then, have a blessed night. If you are new to my channel, please do well and subscribe. And then my returning viewers, I always want to say thank you. So see you in the next video.